So the next part of the trading exchange that we'll take a look at is the order book depth chart. So many exchanges offer market depth charts, which display all the orders in an order book in a more visually pleasing format. The depth chart displays buy orders, green on the left, and sell orders, red on the right, on a stacked area chart. These visuals may help some traders identify buy and sell walls easier. Now, if the green wave, the buy orders or the demand, outweighs the red wave, which is the sell orders and supply, then price may increase. The reverse is true as well. If the red wave, those sell orders or that selling pressure, outweighs the green wave, then the price may decrease, right? It's just another visual way of representing the order book. Important to remember, order books are updated frequently. They change every second, so this information must be confirmed with other market analyses before making a trading decision. So here's our example of our depth chart. This is particularly seen here, this whole area, and this really every exchange will show this, these green and red waves. I know for me at first it was a little confusing, and I actually picked up that these were the orders, the size of the orders, and basically I read them as levels of demand. All right, so it looks like the green wave is going to be larger, and I can kind of tell that, hey, this kind of gives me an indication that, hey, there's a lot of support, there's a lot of buying pressure, and that we should overcome and eat into maybe the smaller portion of the red's share, right? We can also, I learned that before even learning how to read an order book. That's something I just personally picked up on. Now, we can also start to pinpoint possible levels of resistance, right? And these buy and sell walls, especially by these large noticeable chunks or divots upwards, like particularly this one. So overall, the green demand is gradually growing, and then we see this sharp increase, this sharp jump up. We see another one here, another sharp jump up. These could be interpreted as buy walls. Perhaps maybe this is about $75. So maybe there's a significant amount of orders at $75 for this particular asset. This is Solana, by the way. So maybe there's a large amount of buys here, right? Where price won't easily fall below. We could say the same here at $90. There does seem to be a significant jump up and a curve upwards. Maybe there's a large amount of sells at $90, so price might not easily go above that $90 level. Here we see maybe this might be about $97, give or take, maybe 96, 97. Another sharp, noticeable bump up in the height of the red wave. So this could be another indication that, hey, there's probably a lot of sell orders in this. And this is something that you can confer with the actual order book itself, and you'll be able to compare and contrast. And really, it gives the same information. It's just another way to visually interpret it and read an order book. Here's another example of an order book depth chart. Here we see a pretty significant large amount of buy orders really overseeing and really overshadowing the sell orders. So this is a situation where it looks like there's a strong level of support, particularly around this $36,000 level. This could possibly lead to maybe further valuations if this buy pressure continues to eat into the selling side. So moving on to order book history. Order books typically have an option to show the history of all transactions that have executed in the past, along with timestamps of when they were processed. Here's an example of an order book history chart or a section. We see all these different trade sides. We see the sides that were actually traded. We see the prices that they were traded at. They're typically color coded, so either they're red for sales or green for buys, and we also see the times. Now, studying this could be helpful in identifying trends and noticing buying and selling pressure, maybe certain prices that the asset is bought or sold at, or typical just trends and maybe patterns on that particular exchange that maybe you could use for your advantage. It's important to keep in mind, though, that orders are processed every second, so the information gained from it may be quickly outdated, and especially in a trending market, if prices are continuously going up quickly or going down quickly, it can be a little bit more difficult to keep track of where price is going if you're just staring at the order book history, but it's just another tool, another thing to keep in mind as well. Order book history is also useful when gauging how liquid an exchange is. So a liquid exchange or liquid market would show many trades being processed every second. Here's Coinbase. This is considered, I think, the second largest exchange in the world behind Binance in terms of liquidity and trading volume. So Coinbase Pro has a significantly high, a very large trading volume. Millions, if I can't remember the exact amount, I'm not going to say billions, but it is the second largest in terms of trading volume, only behind, second to only Binance. And here we see several instances every second of trades being fulfilled, even faster than every second if you really take a look. Sometimes there's multiple trades being fulfilled every second. Now, an illiquid exchange or illiquid market may show longer periods in between trades, indicating that there are not enough buyers to meet the sell orders and vice versa. There's not enough demand for those coins or not enough demand for those trading pairs or on that particular platform. So that's something to keep in mind if you're looking for an exchange to trade or if you're looking for a coin to trade or trading pair. You really want to make sure that you're trading, especially as a beginner, you want to make sure that you're trading something that is in a liquid market. You don't want to have trouble buying the asset or selling the asset, especially if in times of extraordinary times, maybe there's some sort of run up and you really want to sell before price comes crashing down. If you're in an illiquid market where there's not enough buyers or sellers, you're probably going to have trouble selling that asset. Now, another aspect of the crypto exchange is the 24-hour price change. If you're on Coinbase, you'll typically see this at the top. Crypto exchanges and indices typically display the 24-hour change in price for a selected asset. This is shown in terms of percentage increase or decrease from the previous day. The change is calculated by comparing the current price of the asset at the current time of the day to what it was the day before at the same exact time. So let's say it's 10 a.m. on a Friday. Bitcoin is 33,000. Yesterday, Thursday, at 10 a.m., Bitcoin was valued at 30,000. The 24-hour price change would show that Bitcoin is up 10% and it would glow green. Likewise, if the next day on Saturday, 10 a.m., Bitcoin was trading at 30,000, the 24-hour price change indicator would show a negative 9.09 change in red. Why would that be? Because on Friday, Bitcoin was valued at 33,000, right? So Bitcoin went from 33,000 at 10 a.m. on Friday, and by the time Saturday 10 a.m. rolled around, Bitcoin was trading at 30,000. So this 24-hour price change indicator would show that negative decrease, and it would display the percentage in red. We'll also talk about volume or trading volume that is displayed on the trading exchanges. Volume or trading volume is a measurement of the number of units of an asset traded in a market. This can be displayed in terms of the crypto itself. Here we see in terms of Bitcoin, so 13,270 Bitcoin was traded in a 24-hour period. Sometimes it's also shown in dollars or euros, depending on the market you're using. Every transaction is included in this, buys or sells. It's recorded by the exchange and it's used to calculate the trading volume. Volume can be displayed in terms of fiat or in units of cryptocurrency, like we see above. And in the image above, we see Bitcoin's trading volume was about 13,270 Bitcoin in a 24-hour period.